Affirm is a buy now, pay later company that helps facilitate transactions by making it easier on consumers to buy things, maybe before they've gotten their paycheck or maybe before they have the money to buy it. Affirm is an interesting finance company that I think has strong tailwinds behind it, and I wanted to evaluate this growth stock and answer if I think it's a buy, hold, or a sell. Now, I want to thank one of my members, Evelyn Murphy, who's been asking about a video on Affirm. It's been taking a while, but thank you for your request. And if you want to ask about a video for me to do, please ask in the comment section below. I take note of all of the requests, whether it's from members or subscribers or just regular viewers. I just prioritize requests from members and then subscribers and so on. So let's get into this video here. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, I wanted to start with looking at the company's latest fourth quarter and fiscal year 2024 earnings results, which the company published on August 28, 2024. You can find this by going to Affirm Investor Relations website, and they have all of these pages available for you to evaluate. Now, in their fourth quarter, the company's gross merchandise volume increased by 31% to $7.2 billion. This is the total amount of transactions that were conducted by Affirm. So this isn't how much revenue the company made. This is just how many transactions were completed using Affirm as the payment method. Active merchants, which is critical in my opinion, increased by 19% to 303,000 in the fourth quarter of 2024 compared to the fourth quarter of 2023. And I'm going to talk a little bit more in detail about this throughout this video. And this is the tailwind that I talked about, the win-win situation Affirm offers. For merchants, it's attractive to have a buy now, pay later company like Affirm on your platform because it facilitates transactions from people who may not have otherwise purchased. And this is more important for companies with higher priced items. If you're selling something that's, let's say, $200 and above, or maybe even $100 and above, maybe it would facilitate more transactions if you would let people pay you in installments, right? Maybe they want to pay you $50 today and another $50 next month, or maybe they want to pay you $25 over 4 weeks. Whatever the case might be, every consumer is in a unique situation. They might be waiting for their paycheck or waiting for some funds to arrive, but they want to buy that product today. Instead of waiting for receiving the money, maybe they want to buy it using Affirm and then they'll pay later according to the terms that they're offered. So merchants like this because it opens up new transactions that may not have otherwise happened. And then consumers like it because they get to buy things sooner than they have the money. So they get things ahead of the time when they get money. Now, you might say, well, shouldn't people wait until they have the money and then buy something? Wouldn't that be better financial management? I'm not here to argue that. The point is that Affirm makes it more convenient for both sides of the equation, which is a recipe for success. This is a proven recipe for success. This is why Visa and MasterCard have reached the levels they've reached, is because they worked on both sides of that equation, getting consumers to sign up with Visa and MasterCards. And then if billions of people have Visa and MasterCards, then businesses want to accept those as payment methods because that opens up the possibility for more transactions. It's similar here with Affirm. As more and more consumers join Affirm, which in the latest quarter increased to 18.6 million, up 19% year over year. As more and more consumers join, more and more merchants will be interested in accepting Affirm, integrating it into their payment website, payment methods, because they want to have access to all of those active customers that are using Affirm that may or may not have purchased if they weren't accepting that payment method. And so that's why it's that win-win situation. Both sides of the equation benefit, and the company will benefit from network effects. As it grows, those network benefits will increase exponentially. As they gain more customers, the number of businesses will accelerate exponentially. You can see here the big mismatch between the number of customers and the number of businesses that accept the payment method, this will increase over time as long as Affirm continues attracting customers and continues growing both sides of this equation. Total revenue, meanwhile, increased by 48% to $659 million, up from $446 million. So overall, the business is growing nicely across categories and across both sides of this equation. And then more impressively, the growth in revenue and customers is leading to improving unit economics. The operating profit margin went from negative 55% to negative 11%. The adjusted operating profit margin went from 3% to 23% year over year. And the transactions per active customer are also increasing. Moving on to comments from the CEO, he said that just over 2 years ago, we set a goal of achieving profitability on an adjusted operating basis by fiscal year 2023. And as our fiscal year 2023 ended, we were proud to report that we did achieve this goal. And I like to see this. I like to see companies set targets and hit those targets. Unlike some other CEOs that set lofty ambitions, tell you they're going to have driverless car technology in 2020, and here you are in 2024, and there is still no driverless car technology, and they're now promising it a couple of years later, continuing to make promises, missing deadlines, and on, right? You don't like those situations. You like these situations where the company says, look, we want to do this, and they do it. And then they set a new goal, and you can be confident that they're going to hit that new goal because they hit that previous goal on the timeline that they set. So the new goal that they're setting is that they intend and expect to be profitable on a GAAP basis in the fourth fiscal quarter and plan to operate the business while maintaining GAAP profitability thereafter. Nice, right? So they intend to be profitable on the bottom line in the fourth quarter and from here on out to be profitable on the bottom line. So no more losses on the bottom line is the expectation for this company longer term. They go on to say that they connect buyers to sellers in a network for payments where each transaction is individually priced, honest deal for the buyer, and genuinely incremental sale for the seller. And I talked about this a little more earlier, where they're bringing two sides of the transaction together, and they're helping both sides of the equation. They're solving for that part of the transaction that may not have happened if there wasn't this facilitator in between the buyer and the seller. If there wasn't this buy now, sell later option, there would be many transactions that would not have taken place. So this helps facilitate transactions. This helps grease the wheels, help things move along more smoothly because people don't have to wait to make a purchase, or it really is, like I mentioned, the grease of the wheels just helps it move along, and that's really good for both sides. So speaking about merchant side, the year-over growth in active merchant count accelerated for the third quarter in a row, exceeding 300,000 as of the end of 2024, their fiscal year 2024. And they continue to make it easier to onboard Affirm and launch new products that resonated with both consumers and merchants. Now, Affirm will be natively integrated into 4 of the top digital wallets in North America. And that's great to hear. The company is working on making it easier to onboard with Affirm, making it less, removing the traction, removing the friction between signing up, and that's going to help more businesses become interested in signing up. All right, looking to Wall Street, they expect Affirm to increase its earnings per share by 93% per year over the next 5 years. So the analysts on Wall Street that are following Affirm stock are very optimistic about this company's earnings per share prospects over the next 5 years. And given the company's history and given the forecast from management, I think this is a reasonable adjustment, a reasonable assumption to make. The company is just now turning profitable on the bottom line. And when companies first turn profitable, those first few quarters and those first few years of profitability have faster growth than usual than the company's longer-term growth rate. Let's say 10 years later, it's not going to be growing at the same rate that it's going to grow over the next 5 years. But if the company can grow over the next 5 years at this rate, it'll really set the company on a path where it'll be difficult for any competitor to remove it from this perch or it'll be difficult for them to be replaced or eliminated from the transaction now, where consumers are looking forward to having that option to buy now and pay later. Looking back for its cash flow from operations over a trailing 12-month period, the most recent total was $450 million in cash flow from operations, and that was up from negative levels throughout the last 5 years. The company only recently turning positive on this metric, just like the profitability on the bottom line, only recently hitting the inflection point. These are businesses that are sensitive to economies and scale. The bigger they get, the more beneficial, the more they benefit from the network effects and benefit from the research and development and technology investments that they put in to establish the business, attract the customers, attract the merchants that initially need to get it some liftoff. And then after liftoff, they don't need to spend that much effort attracting merchants and attracting customers, because merchants will just automatically, like if you start a new business and you're interested in making sales, right? Let's say you start up a new website. Like I recently started up my website, right? PayPal didn't need to reach out to me to get me to sign up with PayPal, right? I wanted to sign up with PayPal because I wanted to make that payment method available for people that wanted to buy my book on the website. And it's the same, it'll be the same here with Affirm. If they grow to be a large enough size, if they grow to having a large enough consumer base, businesses will automatically go and sign up with Affirm because they want to make it available to customers that are coming to their website or coming to their business. So that's why the initial lift is the hardest part of these kinds of businesses, and Affirm has gone through the most difficult stages of that lift. Now it's profitable on the bottom line. Cash flow from operations is comfortably positive, $450 million. So the hardest part is behind it. Affirm is trading at a price to free cash flow of 47, which is on the more expensive side, but you're also getting a premium company that has premium growth rates, right? You saw the growth in customers, the growth in merchants, the growth in revenue, the growth in free cash flow, all of which were excellent, well above double digits, some of them above 20, 30, 40% rates of increases. So I don't mind paying a premium price for a company that has these kinds of premium performance metrics. So to answer the question, do I think Affirm stock is a buy, hold, or a sell? I would say the stock is a buy at current valuations. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock. And this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.